What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. We're going to be covering the Sofi stock after the bank charter approval yesterday. And guys, the stock is up huge. This was not a completely sell the news. I told you guys there was going to be some extreme volatility, ups and downs, but this stock is going higher and higher into the close today. Be sure to smash the like button. Let's try and get the video past 1,000 likes for the YouTube algorithm. Be sure to subscribe to the channel if you are not already subscribed. This is the #1 YouTube channel covering the Sofi stock for the past 6 to 8 months. And I told you guys it was going to take patience, but the world is starting to figure out that this is going to be the fastest growing bank stock in the entire world for the next 10 years. Of course, we are not profitable yet, but profitability is coming because we got that bank charter license. Be sure to drop a comment. Are you buying Sofi stock right now? Let's get into the video because I have some bullish news coming for you today. All right, guys, take a look. All three indexes are down again. Well, four, including the Russell. I try to not talk about the Russell because we know small caps have been toast for the past year. So every single index is down. NASDAQ is doing all right. The NASDAQ is actually corrected. I heard about 11% over the past 2-3 months. So now is the time to be buying your favorite technology and growth stocks because we are getting into technology earnings. Guys, if I hear value one more time, I'm going to lose my mind. Look what the value stocks just gave you with JP Morgan. 1% growth. And we also had Goldman Sachs, 7% growth, 8% growth. Not a lot of growth. Stock sold off. Value is not performing well. It's time to buy the fastest growing stocks in the world, and that is fintech. Fintech is going to be taking over the banking industry because everyone is going digital. We're up about 16.5% today. I think we hit highs of around 19% at one point, so a little bit of profit taking. But guys, we have some massive news coming after hours. CEO Anthony Noto will be live on Mad Money tonight, 6 p.m. Eastern time. Don't miss it. I'm filming this video around 2 o'clock. I'm sure this video will be out around 3 o'clock. So, I'm trying to get it out to as many people as possible that are, working. You need to watch this because Anthony Noto is going to give everybody the 2022 game plan, potentially the 5-year game plan on this bank charter, and it is time to go long. Just scratch off the first year of trading for the Sofi stock. Let's just scratch it off. The company was getting its footing, getting adjusted to the markets. We are about to have our third earnings report. So now is the time to go long. Start your 5-year horizon now. Give this company 5 years, and I'm telling you, you are going to 10x. But of course, by the end of the year, I'm still predicting a price target of $45 or higher. That's implying about 200% upside from these levels. Oh my God, guys, take a look at this volume. 144 million in volume. This is insane. This is like 5 times higher than the average volume. I'm telling you right now, this stock should be a lot higher, but there is still a ton of shorts out there trying to bring the stock down, trying to cover. This stock is going a lot higher because the world now knows Sofi has that bank charter license. This is extremely bullish for the short term as well as the long term. You're going to see this start kicking in on the earnings immediately. Our adjusted EBITDA is about to go through the roof. We now have the bank charter license, so this 254 million is scratched. Get rid of it. We go down to the real investor presentation with this adjusted EBITDA impact of a bank charter. We are going to 447 million or higher. This could go much higher if the Super Bowl goes the way I predict, and I predict 500 to 750,000 members added in Q1. We are in Q1 right now. That's going to be January to March. Super Bowl in February. We could add anywhere from 500 to 750,000 members. This is going to set up massive adjusted EBITDA across the board. Cross buying is accelerating. Now is the time to get bullish because that dark cloud that I've been talking to you about is now off of our shoulders with that bank charter approval. It took a little bit of extra time with the FDIC, the OCC, governments. We got it done. Now it's time to get bullish. So as you can see in one of my videos I did yesterday, I covered the Goldman Sachs 0-star analyst giving Sofi the lowest price target in the history since this company's been on the public market. The lowest price target of $16. This could have been a hit piece. I'm surprised there's not a little bit of, talk about, some investigating about this price target, because this guy has 0 stars and gave it the day of the bank charter. So that just seems like massive manipulation. We had the biggest one-day drop in the company's existence yesterday, around 9% off of no news at all. This price target was, part of that impact, and this guy has no credibility. He's a 0-star analyst. So we're going to talk about other analysts that are, the cream of the crop, 4 and 5-star analysts that are, recommending this stock right now, what I think about these price targets. We had David C. from Wedbush, 5-star analyst. 345 ranked out of 7,000, tip ranks 450 out of 15,900 overall. This guy is the cream of the crop. Very conservative, it seems like, on his price target. He gave us a price target of $20. That is much higher than the $16 price target from Goldman Sachs. This is a respectable price target in my opinion, but this is significantly undervalued. He is not pricing in that bank charter. I know he did it about yesterday. I think he actually did it before the bank charter came out. So I don't know. There's a lot of weird timing on some of these price targets and price targets adjustments. But I'm going to show you some of the analysis of why he said, he thinks the stock is worth 20 right now. Wedbush starts Sofi Technologies outperformed with a $20 price target, citing 5-year revenue compound annual growth rate of 28%, increased brand presence. Okay, so that's what I like. I like the brand presence. He's talking about that NFL, that marketing that's coming, okay? So I really like that. So in my opinion, this price target is very conservative. He doesn't really talk about the EBITDA. He doesn't really talk about the bank charter. So maybe he's just getting a warm up, and that's why the guy's a 5-star analyst, because he hits his price target. So I think he's going to be going much higher in the future. But once again, that Goldman Sachs guy, that was a hit piece, guys. $16, that's absolutely ridiculous. Betsy Grasick, okay, Morgan Stanley, 4-star analyst. This lady, I'm a bit skeptical about her, okay? She actually cut her price target twice. She went from 25 to 22 to 20 right now. So I am not very, bullish on her price targets, because I read her investment thesis and she's putting out this price target not including a bank charter license. I'm going to show you exactly what I'm talking about. So I'm not very happy about these $20 price targets at all. We should be much, much higher. We can see right here, Morgan Stanley weighs in. This is tip ranks. Look, guys, this just came out yesterday, okay? So there's just a lot of weird timing with this bank charter. The numbers that she plugged in just don't add up at all. And I'm going to show you exactly what I'm talking about, okay? You don't need a master's degree in finance to understand that these expert analysts can be wrong sometimes. So she might have just built this article up maybe a couple of days ago and just put it out. But just let me know if you agree with me or not. After 60% top line growth in 2021, amazing growth, Grosick believes the bears are skeptical of strong revenue growth continuing, looking for a sharper slowdown in 2022. Grosick is no SoFi bear, but also anticipates growth will slow down, expecting 40% growth this year in 2022, with adjusted 2022 revenues hitting $1.4 billion. The analyst sees 2022 adjusted EBITDA reaching $164 million in EBITDA, margins at 11.5%, up from 3%. Where the heck is she getting this 164 from? This has to be without a bank charter license, guys. Look, guys, SoFi's predicting $447 million in EBITDA. So this had to have been, a price target with no bank charter. Look, 254, and she's also counting back, the student loans pulling back. So I think this is just a $20 price target with no bank charter. I mean, what do you guys think? The forthcoming boost for student loan refinance originations will get another 3-month delay. Yada, yada, yada. We all know that. $5.1 billion in student loan refinance originations. Grasick outlook presumes a return to the pre-COVID run rate. $2 billion a quarter does not occur until 2023. But guys, there's other things to pick up for the student loans. We just got the Pagaya partnership. This is going to boost our customers into our platform for private loans, for mortgage loans, and they're not accounting for this picking up the slack on the student loans. Pagaya's proprietary artificial intelligence technology and infrastructure enables fintechs, banks, and other loan providers to offer consumers more robust access to financial products outside the existing traditional credit models. This is going to open up SoFi to, thousands upon thousands of new customers, and I think this is going to pick up this slack for the student loans that, are getting pushed back. And remember, SoFi pivoted. They put this partnership together when they got their first, student loan pushback. This was before they got the additional pushback to May. So they were already pivoting, guys. They were prepared. They're going to pick up in mortgages and private loans, in my opinion. So guys, what do you think? She's predicting 164 million in EBITDA with this $20 price target right here. So what do you guys think? I believe SoFi is trying to hit or surpass the 447 they put out now that they got the bank charter. So I think something is significantly wrong with all these price targets at $21. Okay, the 16 with Goldman Sachs, the Betsy 2 to 300 million off in EBITDA with her, update that just came out yesterday. The Wedbush not really talking about the bank charter. I mean, I just think there's a lot of, bigger banks kind of holding this bad boy back. And you guys can see the numbers. When is somebody going to write an article about SoFi potentially hitting 500 million in EBITDA this year with a bank charter? When am I going to see an article like that? So guys, this upside right here is not updated at all, okay? This should easily be, 28 or higher once this bank charter actually gets priced in across the board. So we have no sells, but man, these holds right here, these $16 and $17 price targets, these are really irking me because it is not correlating to what SoFi has in store for them in the next, couple of quarters coming up. We are about to get this Super Bowl on the way, and we are going to see user growth accelerate. The pagaya will pick up, the student loans, getting pushed back, and we will see mortgages and private loans pick up the slack, and I expect adjusted EBITDA to hit their numbers. This is one of the strongest management teams I've possibly seen for a fintech. They are picking up people left and right. USAA, we have Chad Borton, the president of SoFi Bank right now. This is massive opportunity, and these price targets from these analysts are not making any sense at all. All right, guys, as we can see, SoFi stock is up around, maybe 15.9, 15.8%. Volume is still accelerating into the close. I'm telling you right now, I did say, a couple of videos ago, maybe a month or so ago, I said I expect, the bank charter to give us, a 30% move the day it happens. A lot of people were afraid about the sell the news, but I think we could see some stuff happen once Anthony Noto really gets on that mic and, puts the bears to rest about what they are trying to do. Profitability, reinvesting 70 cents on every dollar, trying to go after growth and profitability to protect the shareholders, from these bears, talking about earnings nonstop. This is a company that is building the ground, okay? It is building success for compound annual growth for the next 10 years. They are not trying to go all out on growth, investing, 99% of their revenue back in. They are doing it right, 70% of every dollar, and I really like that. And for some of you that didn't watch my video yesterday, I explained what kind of potential we could see on the SoFi stock share price in the next 5 to 10 years if they go for that, profitability, that net income coming in extremely positive. We have Visa and MasterCard legacy, 60 and 50-year-old companies. I think we can get to, where these companies are at 2 to 3 times as fast, okay? We could potentially do what these companies did in 60 years in as little as 20 to 25 years, okay? So it's going to take time. As you can see, Visa, I know a lot of people are going to talk about how profitable these companies are. That's why I put it up here. 12 billion in net income, MasterCard 9 billion in net income. That's extremely amazing. SoFi $0 in net income. That is very important for long-term growth in your stock. My 5-year projections are 5 billion in revenue, 2 billion in net income, 50 PE ratio, a little bit higher than the other PE ratios of 40 and 38 from Visa, but we're going to be growing much faster. This will give us a 100 billion market cap from today's price. 100% gain. But remember, guys, this is a 50 PE ratio. We have stocks like a Tesla and some of these other faster growing technology plays that have a PE ratio of 300 to 400 right now. So if we actually got that in 5 years, I mean, guys, this would be a $400 billion company. You would literally, 40x your money if a PE ratio did get up to 3 to 400. But I'm just telling you what it should be fundamentally compared to the legacy companies right now. So this is pretty much the lowest base case, PE ratio price target I can give you. This is a 10x in 5 years. Long term, we're talking 10-year projection, 18 billion in revenue, 6 billion net income, 35% profit margin, 50 PE ratio, keeping it the exact same. We're talking 300 billion market cap. That's a 3,000% return on your money. Oh, let me fix this right now. 1,000% gain, not 100. So a 3,000% gain if we just keep the PE ratio in line with the legacy companies right now. Remember, if we're talking 200, 300, like the Squares and the Tesla, when, the market gets very excited, this is a $1 trillion company in 10 years. So this is the long-term, growth projections I'm talking about, okay? So go long on this company. Don't go earnings. Don't go next week. Don't day trade this bad boy. Start your 5-year hold today, because I really believe Anthony Noto is going to show you exactly what the game plan is today, and we could be up for major success in the near future. 10x in 5 years, a 30x in 10 years. This would be life-changing, income for anyone, investing in the market. And if you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. SoFi stock, Anthony Noto, Jim Cramer, Mad Money, 6 o'clock tonight. Be sure to watch it. I'm going to edit this video as fast as possible. Be sure to drop a comment and smash the like button. What is your price target for the SoFi stock this year? And be sure to subscribe to the channel if you're not already subscribed. Once again, my name is Kyle. Hope you have a great day.